Everybody, go ahead and continue to enjoy your lunch, but we're part of that hard-working Calvinist philosophy. We're going to work right through lunch. So for those of you who just joined us, welcome. We're glad you're with us. Just as a recap of the morning, we heard from economist and Northwestern professor Joel Mokyr on the impact of technology advances and how those will change the way we work and what we do. And then Jason Laurie and I shared our thoughts on long-term capital markets expectations and the current market challenges facing investors and strategies for navigating those challenges. So now it's my pleasure to introduce our guest speaker at lunch, Professor Jeffrey Rosensweig. A little bit about Jeff. He is an associate professor of international business and finance at Emory University's Goizueta School of Business, where he specializes in global strategy, global economics, and international finance. Prior to joining Emory in January of 1988, he was the senior international economist at the Federal Reserve Bank of Atlanta. He's also taught at MIT and the economics department and the School of Management at Yale University. Jeff received both his master's and bachelor's in economics from Yale and a PhD in economics from MIT. So this afternoon, Jeff is going to take us on an around-the-world tour to examine the major geopolitical factors and demographic issues affecting the global economy. He'll explain the evolution of various global trends and forecast their impact on the U.S. economy. So we want to be sure to reserve time for questions. So we'll go to about 12:45. We promised you a 1 o'clock prompt ending. Anna Nichols and Laura Stillman from our office will be on hand with microphones for those of you who want to ask a question. Or if you would prefer to write it down directly, there should be paper and pens on your table, and then we'll collect those when we come by. So now please join me in welcoming Dr. Jeff Rosensweig.
I want to thank Steve, although he and Joel set the bar high, but tough. I'll do my best. Speaking over lunch is interesting, but at least you won't be on your iPhones. But I'm going to give you a global tour, just like Joel gave us a tour, really from the Precambrian age to 2050 or so. We'll do a global tour, and I'm interested in finance, as you all are, but also economics and demographics. So that's what we're going to do. Here's the world at 9 o'clock at night. Satellites are circumnavigating. Of course, it's 9 o'clock local time at different times, so it's 80 satellite photos kind of merged together. And what you see is a little bit what Jason and Steve were talking about, is that a lot of the wealth now, places that at 9 o'clock at night are emitting light. They're industrialized. They have economic development. Most of them are in the northern hemisphere. The developed economies, U.S. and Canada, European Union of 28 nations, although only 19 use the euro, Japan, South Korea. But because they're advanced nations, perhaps a lot of the opportunity for kind of adding alpha, for gains that may exceed an overall market average, may be harder than in some emerging markets in Latin America or Southeast Asia, certainly sense South Asia. And then the idea that there's just a nascent beginning of frontier markets in Africa, very much in Vietnam and Peru. So it's kind of an interesting sweep through the world that will go on, just as Joel gave us a sweep through history and the future. If you're interested, why does Chicago look so long? Any of you live on the North Shore, or whatever you call it? Why is it still dark at 9 o'clock at night? Well, maybe part of it is because of Milwaukee, but basically because of the traffic. You're still trying to get home, right? So at 9 o'clock at night, your traffic lights are there. In Atlanta, we sprawl, so we're in kind of the same situation. I always like the word megalopolis. I've always wanted to use it in front of brilliant people, but you see that here. You go from Boston, Providence, Hartford, New York, Philly, Baltimore, Washington. It's one whole conurbation. You wonder why we can't have good train service in this nation. All right, so what we'll do is we're going to first say that there are over 200 countries for which Joel or Steve or Jason and I can get data. But if we looked at them all, that would be madness. So I'm going to look at the top 10% in terms of size of their economy. It's a little bit like a 90-10 rule, not even the 80-20 you're familiar with, the Pareto principle. These 20 economies, this 10% of the world's countries comprise about 90% of world production, even more than that of world market capitalization. You know, the U.S. stock market itself is a fairly dominant part of world stock market capitalization. So what I've done is I've shown you the forecast for 2016 and 2017 from a consensus of good forecasters of their economic growth, and I ranked them in descending order based on 2016 because it's closer in. Perhaps you can make a more accurate forecast. But interestingly, I put stripes on some and not others. I striped India, China, Indonesia, Nigeria, Brazil on the other end, but I didn't stripe US, Canada, UK, Germany, Japan. So I have to make you participate. What was the criterion I used to stripe some? Why would I have striped Nigeria, but not Canada? The striped ones are the what? They look like the fast growers, right? Remember, I'm ranking the fastest growers on the left, but in fact, they're what? They're the emerging markets. I also heard someone say developing nations, developing economies. That's also true. As economists, we look at them as developing economies. They were poor, they're very poor, they're in a process of development. They still have a lot of poor people in many cases, but they have a rising lower middle class, and therefore they have a much greater purchasing power that global firms can expand into. So we see the rise of big emerging markets. I could show you a graph of the last 10 years, 20 years. In the case of India, they started opening up more to global free markets in 1991, so I could go back 24 years. China, when Deng Xiaoping consolidated power in 1979, they set off on a growth path, literally of growth of 9% per capita per year. And since you're now compounding with the rule of 72, every 8 years they doubled for the last, I should have calculated that before, I guess 36 years since 1979. So what we see is the emerging markets have slowed down, as you know, but I don't want you to miss the fact that there's still a great process of economic development unfolding before us. On the other hand, there is Russia and Brazil. Of those BRICS that Goldman Sachs named, Russia and Brazil are in recession now. They thought there would be, the forecasters, a return to slight growth in 2016. The latest now is they will remain in recession, but not as deep, and they'll come out of it in 2017. Joel spoke about a kleptocracy, a corrupt kleptocracy, maybe not the most rational economic management. Well, there's Russia. Russia and Brazil are also affected by this downturn in the commodity cycle. In the case of Russia, 90% of their exports are oil and natural gas. So the prices of those down, plus Putin going into Ukraine and justifiably economic sanctions against them. It's taken these two of the BRICS and slowed them down. All right, so takeaway number one, the emerging markets are still emerging, the big emerging markets, even if they have had a deceleration, and they will continue to emerge. Takeaway number two, there are two of the big emerging markets having some trouble, but they are seen as rebounding eventually. Takeaway number three, there's been a reversal. After China being the fastest growing economy for decades, as I said, India has already taken that position, and as we'll see on the next slide, is forecast to continue to have a faster economic growth. Does anyone know why, by the way?
They have the best central banker in the world.
Yeah, who I guess spoke here 2 years ago? In my slot? I might as well leave now, I really am. It's either a forecast that I've got great future, or if you compare me to him, what did he say to you? 2 years ago, speaking right here, was India's central banker, current central banker, and he left the university world in Chicago, and he's doing a great job. As great as he is, there's another factor that's a more long-term factor. Steve alluded to it, the demographics. You know, one nation had a one-child policy, they're aging. The other nation had about 3 kids per family. And so you combine that, and that's why China just got away from this one-child policy, because they realize that they're having shrinking labor forces. You combine that with the fact that China had much greater economic growth for decades. They're at a much higher level of productivity. India is maybe on a bit of a catch-up cycle, as China, they already use Xerox machines. They're not copying by hand. They maybe are not able to have that catch-up cycle as much as India does. All right, so that's another takeaway. The final takeaway, and you saw Steve's forecast, for instance, but the economy grew maybe in some of the Reagan years closer to 4%, in some of the Clinton years grew over 3%, but a longer-term average, and Joel, you should probably help me with this, but probably more like 2.8%. Higher, you know, when the baby boom was really coming into the labor force, et cetera. There's a feeling now that because baby boomers are retiring, because there is still some problem in the economy, we have a tightening fiscal policy we can discuss later, maybe a tightening monetary policy. Maybe we're now on a path of more like 2.5% growth, not just in the next 2 years, but looking forward because of this, you know, our demographics aren't terrible, but we are aging. On the other hand, Joel gave us ideas for what can be called technological optimism, that even with a labor force that won't be growing like it used to, that productivity, the output including of new goods, as he said, in services, could grow and carry us. But still, the European nations, Japan, are bound by demographics that may really frustrate their growth. Now we go out to 2019. You have my slides. I don't have to spend much time with them. You see that no matter what the government statistics will say, China will continue to be on a decelerating path of economic growth. Double-digit days are over. Even the 7% target they had is over. And they will decelerate probably to 5%. But remember, on one measure, they are the world's second biggest economy if you compare using market exchange rates. If you compare by correcting for the purchasing power, and their currency is pretty low, they are the biggest economy. When you've grown and you've doubled every 8 years, you're not going to be able to maintain double-digit growth. So 5% growth, and at that point, 2019, China will be the world's biggest economy. To achieve 5% growth on the world's biggest economy, that's still a lot of goods and services. All right, but we do see India taking something of a lead, and if anything, accelerating. Indonesia is one of those interesting countries that Jason is looking at, and Paul and Aaron and the others, which is they're not a so-called BRIC, but they've been growing fast. They have a beautiful demographic profile, which I can talk about at the end. They have some corruption, but maybe over time the corruption will be reduced. They have natural resources. Nigeria is on a similar path. Joel rightly said they have corruption, there's something of a kleptocracy, but they also have a lot of human resources, as well as their natural resources. So again, when we think about frontier economies, Indonesia is really not a frontier economy. It's wealthier than a frontier economy, but Mexico wasn't in the BRICS, Indonesia. There are big emerging markets. Turkey, we saw on the graph before, is one of the world's 20 biggest economies. So as many of you are, I want you to broaden your horizon into other big emerging markets as well as frontier economies. Brazil is one of the big economies, so I keep them there. And we see that we'll return to growth. But it kind of reminds you of the idea that Brazil is the country of the future and has been for 100 years. You know, every time we say Brazil was the next one, it just disappoints. So now the forecasters are saying maybe it's just not going to reaccelerate quickly back up to Indonesia rates. But look at Germany and Japan, and France would be right in there. Again, this demographic drag, which is what it's called, will constrain their growth. And in fact, since their labor forces will be declining, this is consistent with what Joel said. They will be able to produce more with less workers, productivity being the production per worker or per worker hour. And so that's the only reason they will have growth is this kind of technological progress. But still, Japan with the longest life expectancies on Earth, and unlike us, not with young workers coming in, they're not open to immigrants, the future is not as bright. And as you can see, at least according to these forecasters, we'll be in the U.S. in a range of 2 to 2.5%. Not like the great old days, but with the population growth slowing down, increase in our standard of living. All right, now I want to say that I'm too honest, because data came out a couple hours ago, and I figured I should incorporate it. So I want to thank Anna. She helped me update the graph at the last minute. But my whole theme was the title, that we have a strong dollar. As Steve said, we have a strong dollar, which makes our goods and services expensive to purchasers abroad, where they have to give up their money and their income. And economies are slowing. I showed you that some are growing, but there's a deceleration. So from a relative price effect, we're getting expensive because of the strong dollar. From an income effect, some of their incomes are not growing or not growing as fast. So the whole idea is our exports have been flatlining, in fact, have been coming down, and they went up last month, announced an hour or two. So if I wasn't honest, I would have just kept with what's in your handout, because obviously we had to Xerox those a few hours ago. But exports did fall a little. No, excuse me. You had to have good eyes, but exports rose a little bit. But what's interesting is if you look at the dollar jumped today. Like, wow, exports are no longer coming down, they're going up. The U.S. can compete. Our economy will great. And Yellen, said, maybe we'll raise interest rates. The focus some people have on 1 month numbers that will be revised always amazes me. It's a little bit like when George H.W. Bush was not reelected. As you know, usually where the election day comes, the unemployment rate and the job creation is announced a day or two before, depending on where in the month. First Friday in the month and then election Tuesday. And there was a report that jobs went down, and it was only later when revisions came in that jobs went up. And I think George H.W. asked for a recount. But so I'm honest enough to say that exports went up, but you really do need good eyesight to see it. And more importantly, to me, exports had been a key locomotive that brought us out of the Great Recession. Okay, we're in a Great Recession. There's no demand to build houses. We have an excess inventory of houses. But all of a sudden, other economies are doing pretty well. Not all, but China had a big economic stimulus, the size of President Obama's, and they were doing well. Canada was actually doing pretty well. They are the biggest market for our exports. Green are our exports of goods, which are manufactured goods and commodities. And we were still the world's largest agricultural exporter, and world population grows up 76 million a year. So as some people were marching into a lower middle class, there was more demand for our agricultural commodities. But also, there's exports of services. Everyone in this room probably is in a service industry. We're in education services. My friend David, who I went to high school with, he founded and is doing very well with an architectural firm. So he's in architectural services, financial services. Well, luckily, the U.S. is quite good at service industries. See, the red is our imports of physical goods. So you can see it moves around, but the red is always greater than the green. The green brings in cash. That's why I made it green. That's our exports, and we earn revenues. The red is what we spend. But on services, we export the blue and we import the brown. Tourism services, educational services. You go to Booth or to Kellogg and you look at the MBA students. If it's anything like mine, at Goizueta, they're 40% foreign. And we're expensive private universities. So we export a tremendous amount of education, brings in a lot of money, and we export financial services. Often if there's a merger in Europe, it's still U.S. investment banking firms. And this morning it was announced that we hit an all-time high in services. Joel, I think it ties in a little bit with your graph that we went from agriculture being a huge share of employment down to 2.4, then manufacturing, and now as we can produce more manufactured goods, I think we produce more than in our history, but only 9% of our workers instead of over a third, we're a service-based economy. And fortunately, we're good at services. Medicine is another example. If you're rich in the rest of the world and you have cancer, you're going to go to MD Anderson. And that's, this professional service excellence of the U.S. helps us. Finally, why did I throw the oil price on there? One thing, it fit because I made my scale dollars per barrel, and I was showing you exports or imports in dollars per month in billions, though, and it just happened to work out well. But notice a tight correlation between imports of goods, which are manufactured goods or commodities like oil, and the price of imported oil. So I said it's the price of imported oil. So if you really have imagination, you look at this graph, and what I see is two things. I'm very visual. I see a locomotive of exports pulling the U.S. out of a great recession of 2008, 2009, foreign demand for our goods and our services. But I also see fracking. See, our economy has grown the last 6 years. As Steve showed, our stock market is much higher. There have been good returns. We're wealthier. We are buying more BMW and Jaguar and luxury goods. So why aren't the dollar value of our imports rising? Well, what do I mean fracking? We are importing less volume of oil as we produce more of our own energy, but also our fracking of oil and natural gas has been significant enough that on a world scale, it's added enough supply that it's reduced the price, and as you know, less than half the price of that we're paying for imported oil. So in this last month, for instance, the trade deficit got a good deal smaller than August. And everyone's saying, oh, it's because exports are up. All you have to do, please don't while I speak, but if you get out your phone and read about it, it's like exports are up, we're out of the woods. What really happened is, if you look at the little edge on the red, imports are down, partly because the price of oil has continued to fall, so we're paying less for oil. The other thing is, you know what? In August, all the iPhones came in from like China, the new iPhone. So in September, they were already in. So again, these 1 month anomalies that get people all pumped up, I think a little bit more of a look at a trend is useful. Okay, what I did is I put a lot of lines on to compete with Joel's graph about, what was it, average hours, which really, and Joel's point was, look, they all moved together, reduction of hours, more leisure. This is similar. The reason I put a lot of lines on is these lines are the value of major currencies vis-a-vis the U.S. dollar. And I made it the value of their currencies. So the dollar was strong in 2002. Their currencies were low. But then we had Enron and WorldCom, and we had government deficits and trade deficits. And people began to lose faith in our financial system. And they started buying these non-U.S. currencies, major currencies. Emerging markets were emerging. Everyone said, let's invest outside of the U.S., let's sell our dollars, get other currencies. And all these currencies went up in value, except poor Mexico, which is dominated by, even though I showed you they have good economic growth, have had good economic growth, and will. One reason they will have good economic growth is the peso is so cheap, and they're in NAFTA with us. So there are no political barriers to trade. One of the major determinants of the volume of trade is proximity. They're contiguous to us. You don't have to put it on an airplane. So Mexico's economy is actually growing, but partly because they're so cheap. So for some geopolitical reasons and drug wars, no one really wants to hold pesos, but it is stimulating their exports and their economy. So again, the sweep of recent decades is currencies up against the dollar, which meant the dollar was cheap, and we had that nice run up of exports to 2007. Then a worldwide crash. People want to put their money in the U.S., their wealth, because we're the safe haven in a crash. Their currencies lose value as they buy dollars to buy treasury bills, even if they yield 1%. But then the world holds together. March 9th of 2009, these currencies bottom and start to rise. Stock markets around the world bottom and start to rise. I wish I knew on March 9th to put all my wealth into the stock market, because when you see these things like NASDAQ up from 200%, they're speaking from that point. All right, so the world holds together. You don't have to just keep your money hidden in the safe haven of the dollar. But then we're in a new world again, but it's not really a new world. It's a return of a part of 2009. You keep hearing the word volatility. People are getting nervous. There's a lot of geopolitical risk around the world. And all of a sudden, people put their money into the safe haven of the U.S. dollar again. So the broad point of the graph is they're all losing value against the dollar, and that shows why it's hard for us to export. But imports are cheap. And the only thing that's keeping us from having a rapidly increasing trade deficit is fracking, essentially. Notice that China had a fixed exchange rate, and we felt it was fixed at a cheap level. The Canadians thought the government was fixing it at a cheap level. They would intervene to keep it cheap. Under great political pressure, they started letting the yuan get stronger. But you can see it was controlled. It wasn't jumping around like the euro or others. So what happens is under political pressure, they strengthen it. Then they fix it because everyone else was getting cheap. Then they had to get stronger again, and now they don't know what they're doing, as you know. They thought, look, everyone else is getting cheap vis-a-vis the dollar. We gained 1/3 versus the dollar. Suddenly, we had always been the place that was cheap. Everyone was offshoring to us. Now they might offshore and they are, to frontier economies like Vietnam. Now, stuff that when NAFTA was formed in 1993, we outsourced things to Mexico, but then as China came on stream, we even didn't outsource to Mexico, we offshored to China. Now things are coming back to Mexico to a certain extent, because the peso, as you can see, is cheap, which makes Mexican wages cheap in our terms, and China got expensive. So they thought, we got to stop this. They started, as you know, a small depreciation. They should have done more and gotten it over with. Now people think it'll keep going down, so they're speculating. Capital is fleeing China. We can talk about that in the questions if you'd like, but a total mismanagement. But still, the more important thing is China's feeling more expensive. And things are going to frontier markets and to Mexico, to Colombia, etc. Okay, here is where I wanted to prove a point. Just like Joel, I think, taught at MIT for a while or Harvard, I at least want to show that I'm an MIT PhD. Think of MIT. And nothing against University of Chicago, but the world's leading technology institute, right? MIT. And you're probably thinking, how does this guy have a PhD from MIT? All right, so you have to vote. Again, when you talk at lunch, you have to somehow keep people in the game. All right, you have to vote. First of all, have you ever seen so many lines on a graph? So there's only two possible reasons I made this graph. You have to vote. Either for A, there's deep financial intuition here, where I really want the Altair people to listen because maybe that can help, investments, et cetera. B is, I just wanted to prove that I went to MIT and have a PhD, that I'm a complete geek who thinks you can actually extract any information from this visual hodgepodge. All right? Who votes for A? There's financial value here. Who votes for B? I just want to show I went to MIT. You're right. Now, this is very interesting. Housing. No. Okay, the point here is there's something, it's not widely known, but there's something called commodity currencies. We like to call them. People in international finance, for instance, which is commodity currencies that are very tied to a commodity price cycle. Because the nations make most of their money through international trade, through selling commodities. So many times it's an emerging market or a developing nation, and you can see all of them are developing nations except for the first two, Australia and Canada. In their case, they do make a lot of manufactured goods and some services. Everyone wants to go on holiday to Australia, but they are nations, think about it, they have tremendous land mass with fairly small populations. And because they have tremendous land mass, tremendous amount of natural resources, and with small populations, Australia, for instance, can export a lot of agriculture. They have a lot of iron ore, and so does Brazil, and China needs that to make steel. They have coal. Well, interesting, China's not making as much steel with their slowdown, and that's hurting Brazil and Australia. It's not just that the volume of these commodity exports are going down, but the price goes down a lot when there isn't as much demand. They're fairly inelastic in the short term. So I threw up there in black dotted so you can really see it, the price of aluminum. Because aluminum is now used in cars and airplanes and Coke cans. It kind of tells us a lot about the economic cycle, and it's a commodity. And think how these commodity currencies move on a cycle. So now that the world economy is growing, but it really has decelerated, commodity prices, as you know, have come down, and Steve showed you that. And these nations are not making as much money through their exports, so their currencies have come down, and maybe they can make more money through services like tourism, for instance, now that they have become cheap. All right, so again, visualize. Here's an economy in a great recession, 10% unemployment. On the broader measure of unemployment, that includes people that are too discouraged to look, who are only getting maybe a few hours a week. They're involuntary, part-time. The unemployment was 17%. We're in a great recession. And obviously I'm simplifying, but to me the first locomotive that started pulling us up was our exports, as you saw, grew to record highs. It was only about 6 months ago they hit a record, and they're still hitting record on services. But now that growth has petered out. In fact, we're down since the peak on exports. Well, where can we find some growth? So I asked my high school best friend, David, how's your business? He started this architectural firm. It wasn't good in 2009, was it? He was laying off people, and he's a nice guy, hated to do it. Suddenly it's quite good, He's got his suit back. He had to pawn it for a while, So construction, both residential and commercial, is really coming back. And you see this here in Chicago, for instance, but you should come down to the Sun Belt. Go to Dallas or Atlanta or Florida is all the way back, as you know, especially with the volatility and political nervousness and fear of corruption in places like Brazil, where they're usually rich or poor, all kinds of money flowing into Miami real estate, and even Tampa and Orlando. So I decided to focus on housing, somewhat similar in commercial, actually quite similar. And I made this graph, and this was one of my few good forecasts, and I say that honestly, not with false modesty. But I went all the way back to 1960. That's when you can get good data. And blue is, and this is in millions, it's monthly data but then annualized, how many new housing units do we start constructing every month? It's nice because it's a little bit of a leading indicator. Then obviously then housing completions come a few months later. And the reason I made this graph is it's so volatile, and it always has been, and it tied into something else, I think where Joel kind of started, is like everyone thinks, this is the new thing. This is unlike anything in history. We've always seen volatility. So my point was we average about 1.3 million new housing starts a year. But we never make 1.3 million. We either have idiotic bankers giving loans to builders who make spec houses, no possible buyers, spec houses, and we make $2.3 million. And then we build up an excess inventory, and prices collapse, and the developers try to become professors, and the professors who became developers or mortgage brokers because we thought we'd make more money. We really wish we didn't give up academic lifetime tenure, and there we go. But notice, so my prediction was it will come back, and here's why. Unlike some other rich countries, I mentioned Japan and Germany, which have a demographic drag, we do have kids. We have about 2 kids per couple. And we have immigrants. Sure, not quite as many people are coming in because during the real housing boom, so many people came from south of the border to build them, and also we weren't quite so uptight about immigration as Donald Trump and others are making us now. But over time, we've had 2 or 3 million immigrants. Here we loosened some immigration restrictions. Here, more people are coming in during our housing boom. You see a little correlation. Here, housing bust, less people coming in. Now things are pretty stable. So we're adding 2.3 million people. The economy is growing, so those kids boomerang kids who went to college and came back and slept in the basement, they're actually now getting a housing unit. So red is single family, blue are total units because there's also multifamily. And interestingly, the reason there was a big gap, that's when everyone was building a condo in Miami and Las Vegas, thinking they'd get rich. Then, of course, they were empty, the condos. They couldn't flip the condo to anyone. That crashed. We were building some single-family homes, no multifamily. But then as people got foreclosed on, they needed to move into an apartment. A lot of people made a lot of money, as you know, building apartment units, and some of that is still going on. But also people are buying condos. As people like myself, older baby boomers are thinking, maybe I'll move into some building that has multiple units and not take care of a single family home. So takeaway is that, again, we always think this time is different. It isn't. And there was volatility, but when we're adding 2.5 million people and family formations might be, 1 million, or at least new people, household formations, we're only making 500,000 homes. Ultimately, we're going to absorb all that excess inventory, and that's what happened. And that's why housing prices in many parts of the country are up by 1/3, because we've absorbed the excess inventory, and in some places, it's even tight. Okay, I can do this quickly because Steve talked about it, but essentially you got a Federal Reserve sitting there, deciding what do we do in December, what do we do beyond that. One thing that Janet Yellen did is she signaled today that, much greater chance that they'll increase in December. But she also said something I've been saying for a long time is then the path of further increases, it's going to be very slow and very shallow. It's more like they just want to get one out of the way because they're under political pressure to do it. Everyone just feels like you've been dragging your feet. But in my mind, and I could be wrong, and we can fight about that or debate it in the Q&A, there's really no reason to raise rates. It is true that the unemployment rate is down to their target, 5.1%. We'll see what happens Friday. But the unemployment rate, as you all know, so I don't want to waste your time, doesn't include people that want a job but haven't looked in the last 4 weeks. Maybe they're too discouraged to look. Well, there's a lot of them. There are not as many as there were when things were really bad and everyone was discouraged. As things have gotten better, some people are looking again. They heard that their neighbor got a job. They're thinking, if that guy can get a job, I can. And they're out there looking. But look, compared to all the way back to 94, there's still a lot of people that, if they thought prospects were better, would enter the labor force, which means looking, and then be counted as unemployed. But this, Joel, I don't know what you think. I think this really will dovetail in an interesting way with what you talked about. See, there's 2 ways to be part-time. Let's say work 20 hours a week. There's what Joel spoke about, I hope I'm not putting words in your mouth, which is people that are voluntarily part-time. Maybe they want to be a house husband or a housewife and work part of the time, or they're 68, but stimulus of working, but they also want more time to travel. So, and that's the world maybe we're moving into, the world that Keynes foretold. But there's also people, and you know some, who had a full-time job and health benefits and a happy life, and they got downsized. And now it's like, well, we need to be doing something, and maybe we need to be bringing in income. So it's extreme when people say they're working at Walmart or Starbucks 20 hours a week, but there is some of that. Often some of these places at 25 hours and above, they have to give you health care, so they have you work 24 hours. So my point is, it's a lot better than it was in the depths of the Great Recession, but we still have 6 million people who are what's called part-time for economic reasons. I like to call it involuntary. They want a full-time job, cannot find one, and they're hurting. And that is some of the pain and some of the dislocation. But it also tells me, in terms of Janet Yellen has that dashboard where she looks at many indicators, not just the official unemployment rate. This indicator is like, why would you tighten monetary policy? Why would you raise interest rates? Or, as Steve said, in many ways you're starting to do a QE in reverse. When you have 6 million people who are hurting, and you have 2 million who are too discouraged to be looking for work, and you have 2 million who are still looking. Maybe they really need a job and need the income, or maybe, as I mentioned in my question, maybe even the dignity of work, and it's much less than it was, but we never had, except in that recession following the dot-com crash and the tragedy of 9/11, we've never had over 2 million people who have been unemployed. I shouldn't say never, but since the government has been tracking data. They didn't have data like this during the Great Depression. You got people that are what we call maybe structurally unemployed, or maybe the economy has to be running even faster to get some of them back. Obviously, and Joel talked about this, I don't need to, this transformation going on. Well, how do you take a former factory worker and turn them into a male nurse? You got to invest a lot in training, and if firms found it very hard to find workers, if the economy could be sped up a little bit, maybe they would invest that training and approach some of these people, not as pariahs, and say, oh, you just can't handle the digital economy, you're over the hill, you're 50. So there's many items on the dashboard which, to me, don't signal we got to tighten up, we're about to have inflation. And as Steve showed us, our inflation, according to the Fed's target, they're targeting 2%. Their inflation, core PCE, is 1.2%. They have been trying and trying with QE1, QE2, QE3 to get up to their 2% target, and if anything, it's fallen and not gone up. And as Steve rightly said, if you include oil, that takes out oil, there's just no inflation. Social Security recipients are going to complain, because some of the things they pay for, health care, et cetera, is going up, but their raises or lack of raises of benefits is tied on overall inflation, which, as Steve said, is being suppressed by falling gas prices. And some of them are going to say, I don't drive that much, but I need my pharmaceuticals. So that's going to be interesting, what happens with Social Security recipients. Why do I think at some point maybe commodities will also be in a cycle and come back to a certain extent? Why are risk assets, equities, et cetera, something that firms such as the one sponsoring this have not fled from, and they think, if prices go down, there could be opportunities. I'm still optimistic that there's going to be a lot of growth, including a lot of demand for things like commodities or things that great global firms sell. Most people don't realize this. The world, as I said, is adding 76 million people a year. As women get more opportunities for education and economic rights throughout the world, birth rates are falling, but the world will average over the next 25 years, adding 2/3 of 100 million people a year. It will add 1 and 2/3 billion people in the next quarter century. Some will remain dirt poor, but I think Joel and I think we agree that there will be great improvements in living standards, in per capita income and productivity. So there'll be so many people marching into a lower middle class. But they will not be in the advanced economies. Every 47 seconds, we're going to add 100 people net, maybe 200 births, roughly 100 deaths, all right? But what's interesting, only 3% of that growth are going to be in the so-called advanced economies, and we constitute more of that. So that's the population decline coming in Japan and Europe. We get immigrants and we have kids, as I said before. Latin America has, I would call it, healthy growth. In India, not too fast, not too slow. Other Asia is mostly Islamic nations, other than China and India, and they have fast population growth. And the implications for national security and how do people going to get along, huge implications for investing, but for every aspect of our lives. Africa, and these forecasts include dread diseases and civil wars and malnutrition, will still comprise almost half of world population growth. And in many of those countries, birth rates are falling. But when it's close to 1 in some countries in Eastern Europe and Hong Kong, one kid per 2 parents, and it's 5 in some African nations, even though a lot of those kids don't make it to adulthood, sadly, you're still going to have this big divergence of world population toward these frontier economies. Very much what Jason said, that they're learning a lot about frontier economies and ready to move when they feel the prices are right because of the demographic imperative. Because I did promise time for questions, I want to show you why the U.S. is not quite as bad as people think, our demographic future. We will have population growth, and there'll be a much higher percentage growth. This is like, 2/3 growth in people over 65. So green and above is 65 and over. That's 100 and over. There's going to be a lot more people, as you can see, 65 and above. But that was the baby boom, so that's the point. Everyone's, baby boom's starting to retire. And here we are, 2015. Yeah, it's growing. They'll continue to grow. But what do we call this? Baby boomers having 2 kids. So we hit the mountain, we came back. So what's that? That's the echo boom. We echoed ourselves. Believe it or not, this is the echo boom, which no one I think has ever mentioned. But, how many of you are younger, how many of you are baby boomers? You're born between 46 and 64. Keep your hand out if you have at least 2 kids. Well, that's the echo boom, almost all of you. Raise your hand if you have more than 3 kids. That's the difference between U.S. and East Asia and Europe, and of course China, that many of us have more than 2 kids. Raise your hand if you have more than 3 kids. We're going to call you George Washington. You're trying to be, father of the country. But that's great. That's great. It shows you got vigor. But that's a great demonstration because you weren't the only one. You're just closest to me. Anyone more than 4? And look how happy he looks. Life is good. His wife thinks he's something, All right. So we also have a fatter middle, the working age people. Now, I have to say, the population of people, say, 20 to 65 will grow about 18%, population 65 and above. So the reason I did the green, by the way, is we are not going to be able to give people Medicare at 65 forever, or have them be able to retire with full Social Security benefits at 67. I think we will have to move, even though it's almost impossible politically, move so-called entitlement or social benefit ages up towards 70. Interesting. Think about that in the context of Joel. Well, 68-year-olds aren't going to be able to do all that brawn work. They're not going to have to. So they could work to 70. It's not as cruel. But on the other hand, will they stay up with this technology as it advances? Will I, for that matter? I doubt it. So my kids are my retirement plan. That's why I have a lot of kids. All right. So to me, that may be the real focal point. But now I'm going to go to my final slide. Population profile of India is almost the exact same as Mexico, except India is 1.25 billion people. Mexico is a tenth of that, which is still quite high, 125 million people. Brazil is 200-something million people, a sixth of it. Indonesia, as you know, is 250 million. Right behind us is the fourth biggest population. But they all have the same profile. They used to have a lot of kids, so there'd be a lot of people entering the labor force. But now, as women have more opportunities, they don't want 5 or 6 kids. So they're coming down to between 2 and 3 kids. So as I showed you, labor force, look at the middle. Labor force will grow. They won't be overwhelmed with older people, and they're not going to be any more overwhelmed with 5 or 6 kids, and they can only afford to educate 2 or 3. So the little girls always get cheated out of an education. I'm sure you see it at Northwestern. We see so many women coming from India, coming from Latin America into, for instance, an economics department or an MBA program. Women didn't have an opportunity from Colombia and Turkey has the same shape, to go into expensive MBA programs. People would only put their money in the sun. Now it's the women that are actually leading the charge. All right, I'm going to finish with that point. I noticed when I got up that there's a speaker evaluation thing there. So my final point is, as I look around the room, there's women. Women are so brilliant. I think they're the future. I'm so glad they're having opportunity. Men don't fill out the forms. Thank you very much. Thank you. Any question you want to ask?
We do have time for a couple questions, and then Anna will collect. If you had written some out, Anna will collect them.
Let's see, I think it's Sam. The 2.5% growth, which looks almost like a malaise.
Yes, and the 2 to 2.5% 10-year treasuries, does that continue indefinitely, and does the political scene potentially change that?
Yeah, I guess I'm someone who doesn't think that long-term bond rates will go up very high, much higher. I think they're low now, but inflation is dead in the water. And with the billions of people added to the labor market, in these emerging countries, it's going to be very hard to see much wage increases, which is kind of a push into inflation. So I see long-term interest rates maybe going up at some point. They're low, but not dramatically, which is interesting because I think you said bonds aren't dead, which kind of fits into that. One of the things that bothers me the most is when they talk about the Fed has to normalize, like Fed, rates used to be 5%, and now they're 0, so they should normalize. What's normal? We're in a new world with 3 billion people in the nations I talked about in the job market, with the technology changes, for instance. And so a lot of people think maybe 10-year bond rates, maybe they've averaged, 6%, they have to go back there. Maybe not. And I think that's what you're hitting. In a world of somewhat malaise, and not much inflation, maybe bonds will continue to live. And maybe we're not going to go up to 18% long-term bond rates just because we had them in 1980. In 1980, we only had literally nerds at MIT using the internet. So I think it's a very good point. Fire away. Oh, please.
Hold on. Let me see if I can get there.
I was curious about the chart you put up about population growth from 2015 to 2014, and you were commenting about the other areas being more the Islamic. So there's a political, geopolitical situation going on. And given that, culturally, there's a difference in focus on education,
Yeah.
free market, on women.
Yes, definitely.
How do you see that playing out globally?
Yeah, Judy,
Jeff,
I think that's
can you-
so
can you-
interesting. That's what I
Can you
said.
repeat the
It's-
question? Sorry. can you
Oh,
repeat
yeah, when I showed the next quarter century of population growth, a quarter of it, which I never thought about, but that's over 400 million people, will be added to these nations other than China and India and Asia, which the big ones are Indonesia, Pakistan, Iran, Bangladesh. Those are all Islamic nations. And Malaysia is not quite as big, but they're by far majority Malaysian. So I said, a hinge of history might be how do these societies, as you said, and I didn't get that point, and Judy made a good point. Well, what about how women progress or are not allowed to progress in those societies? Do we get along with these nations? Do they get along with us? Are they interested in getting along with us? Do they move toward a greater form of democracy? This will be one of the great hinges of history, and it's something that we can't control that much ourselves. You know, their decision, what they are going to do about the rights of women. You know, sometimes we think in many of these nations, are they going to try democracy or plutocracy or something? What they're really dealing with is, are they going to make a choice between modernity and antiquity, including their, you know, human rights and issues like that. So I just wanted to make the point, there are going to be a lot of people in those nations. But to get also into what Judy said, there are differences. For instance, Bangladesh has a lower birth rate than Pakistan. Indonesia does. They, I think, tried to give women a little more opportunities, and women were saying, I really don't want 6 kids. This is the most interesting thing about China. They have said, now you can have more kids. People aren't going to want to have more kids. The women have opportunities in education and in the job market. They live in Shanghai, where it's 25 million people. You think Chicago is traffic? You know, 25 million. It's like, what are we going to do with 2 kids? You know, we get a 600-foot apartment if we're rich. So that's very interesting. A lot of these are kind of decisions that happen in these countries. Great point, Judy. Keep firing away. I'm having so much fun.
I think we have time for one more question.
All right. Over here.
Another population growth question for that forecast from 15 to 40. What's the net effect? What is the forecast for deaths?
The forecast, what do you mean by net effect?
Yeah.
Meaning what?
How many people will be dying during that period?
Oh, okay, yeah. Like I said, the total population will go up in the world about 1 2/3 billion, from about 7.3 now till about 9 billion. And it's a rough 2-to-1 ratio. Like I was saying, there's about 200 births per 100 deaths. But you make a very good point, because now I was saying that you know, there's that kind of ratio. As many societies do age, you will see mortality rates rise a little bit. So we will have, you know, over a certain amount of time, maybe 200 births, but 120 deaths instead of 130. And that's why we're adding 76 million people a year. But over these 25 years, we'll average more like 66 million. In other words, the growth of world population is decelerating. But, you know, it's going to grow 50 million a year, let's say 20 years from now. Even with deceleration, there's population growth. But you make a really good point. I mentioned fertility is coming down in some places, but you're right, with aging, mortality will go up. If there's one sweep that is so hard to miss, and so many of you are parents, is manufacturing jobs are down by more than 1/3 since 2000. But healthcare jobs are up by more than 1/3. And if you think about that, and this isn't a nation that isn't aging as much as Japan or Germany, so it's a very good point, you know, that as so many nations age, you're thinking about what kind of firms do we want to invest in that provide services as well as goods to aged people, many who have a lot of money, you know, in telemedicine, et cetera, and if it's not nursing homes. But that is maybe, when I think about my kids, once on TV, I said something stupid. I think I said mothers, I should have said fathers, you know, but I said something like, mothers, do not let your kids grow up to be factory workers, and put them into healthcare. And, you know, pharmacists, nurses, especially like emergency room nurses, et cetera. You know, obviously doctors, but even pharmacists and nurses and physical therapists. A lot of them enter out of school at $100,000 and above. And to me, and the fact that all you see, I could send that graph to Anne if you're interested. I have a graph, amount of jobs in various industries since 2000, index. Manufacturing down, government pretty flat, except for the stimulus, and then down. Retail rising now that the economy is doing better. Leisure and hospitality rising. And Joel talked about as societies become richer, more leisure. But Steve, even though I'm over time, let me leave you with something. When you think about your kids or investments, at the depths of the Great Recession, that terrible winter after Lehman went down, we were losing on net 800,000 jobs a month. On net, some people got jobs, but 3 months we lost almost 2.5 million jobs. You know, every month for the last few decades, we have gained jobs in healthcare every month. So it's not even that cyclic. Even when times are bad, it's that I used to play basketball for Buffalo Grove High School. If I twisted my ankle, how many of you were athletes? Remember rice, a little bit of rasp, ice, remember compression with the ace bandage, all right? And you're back out there at the most 2 weeks. Now that I'm 58, if I try to play basketball and hurt myself or something, it's what? How many months at the physical therapist? 6 months, you know? It doesn't matter if it's a Great Recession or I hurt myself. The physical therapist makes more than I do. But then again, so does my plumber. And if you ever needed a plumber, you know what I'm talking about. Thank you very much.
Thanks, Jeff. Thank you very much. Okay, everybody, we apologize for running over a bit, but really great presentations. Want to thank our speakers, Dr. Rosensweig, Dr. Mokir. Also want to thank, special thanks to Anna Nichols and Laura Stillman from Altair for all their help in arranging things today. If you drove, don't forget to pick up a parking validation. And be interesting, a year from now, we'll be talking about the presidential election, so stay tuned. Anyway, thank you all for coming.
One final point. Is my mic on? Put my mic on. Now, you all know the Kellogg Graduate School. I'm at the Goizueta Graduate School. Mr. Goizueta was the long-term head of Coca-Cola. Warren Buffett is on the board of Coca-Cola. He had so much respect for Mr. Goizueta. So anyway, when we named the school, he gave us all this Coke stock, but he said, you're never allowed to sell the stock. So Altair is telling you all about diversification. That's the first lesson I teach as a finance professor. We are totally not diversified. All our wealth is in Coke stock. But you might think he's 58, he's creative, he's got energy. How do I do it? I drink 4 of these a day. You don't even have to drink them. Just go out and open them, and it's another sale.